The latest stock market rally, David Stockman isn't backing away from his bear case, one that he's held for years. David served as the director of the Office of Management and Budget under President Reagan. He joins us now on the phone. Welcome back, David.
Glad to be with you.
All right. So why do you think today's move is short-lived, and why do you think we're going lower from here?
Well, I think the market's staggering around like a drunken sailor, down 1% yesterday, up 1% or more today, and really just waiting for the next big shoes to fall. These are just the machines trying to tag the old highs. They've been trying to do that for the last 7 or 8 months. They're not going to make it because there's two big, nasty shoes going to fall on the market and on the economy. One is Donald Trump's trade war. I mean, good news from China. They're sending a third-level bureaucrat to meet with a flunky at the Treasury Department by the name of David Malpass, who's a kind of weazened old supply-sider whose views on trade have nothing to do with Trump's aggressive protectionism. We're not going to have a happy solution to this. We're in a trade war big time. It's going to keep getting worse because Donald Trump is unhinged. He is an economic ignoramus on trade. He thinks that when we send dollars to China and they send goods, they're stealing from us. He has no idea that this is not caused by bad trade deals. Our big trade deficits are the result of bad monetary policy for decades. We've priced ourselves out of the world market, and what he's trying to do is going to cause a train wreck. Second, he has no idea that he's running a massive deficit 10 years into a business expansion that is really long in the tooth, 9 months from a record, and we're going to be borrowing $1.2 trillion in the upcoming year when the Fed is finally beginning to shrink its balance sheet, and it will be actually dumping $600 billion worth of existing securities on the market. So you've got a train wreck on trade, you've got a train wreck on deficits hitting what the Fed is trying to finally accomplish, and this doesn't bode well for another 4% up if you hit the old highs, because when it hits, there's easily going to be 20, 30, or 40% down. This economy isn't strong, and it can't take the punishment that is coming out of an unhinged White House and a Washington, policy environment that where they all have their heads in the sand.
David, let's talk about Turkey a little bit as well. The market has seemed to calm down a little bit about its worries there, but you say it is something to worry about.
Yeah, well, Turkey may be 1% of global GDP, but it resembles 100% of the world economy. In other words, the Turkish economy is, flooded with debt, with speculative investment, and with a economic policy for 10 or 15 years that has allowed it to live way beyond its means, and you can see what the result is today. Massive current account deficits. They owe $500 billion to the rest of the world. The business debt in Turkey has just gone out of sight, up over 60 times since 2000. So it's a debt hobbled train wreck that may not be that big in the world economy, but it's symptomatic of where we are everywhere. China isn't that much different. Frankly, we're heading in the same direction. There's $70 trillion of debt on the public and private part of the U.S. economy. In other words, there's a giant day of reckoning with all this debt, and it's not priced in. And even if you take S&P 500 earnings, for instance, they're projecting big increases in the future, but what happens when the $6 trillion of debt on the S&P 500 companies starts to pay 100 basis points or 150 basis points more of interest? That's about $20 or $30 per share of earnings. In other words, I think there's a lot of delusionary thinking about where we are and where we're going. And in the short run, it's all noise, but sooner or later, these shoes are clearly going to fall.
David, Jeff Kilberg here in Chicago, and I agree, and I'm equally concerned about the administration's protectionism plan. However, I want to push back a little bit on the U.S. economy. We saw a 4.1 GDP print. We saw 80% of S&P 500 companies in this earnings season beat expectations. The economy seems to be hitting on all cylinders. What data or what perspective do you see the U.S. economy faltering?
4% is meaningless. During Obama's time, we had 5%, 5 quarters where there was 4%, or even one was 5%, but it doesn't last. Much of the excess growth in Q2 was due to pull forward on soybean exports and generally importers abroad trying to get ahead of the Trump tariffs. And second, there was a one-time bulge in consumer spending from the tax cut that won't be lasting. So, there's no strong economy now, and it's heading into, as I say, year 10 of a business expansion when we have the crazy reality that they're massively increasing the deficit this late in the cycle, and the borrowing requirement is soaring at the same time that the Fed is finally demonetizing the debt. This is really a serious problem. It is being entirely ignored. There will be a yield shock from this because no one repealed the law of supply and demand. There'll be, as I said before, 1.8 trillion of new and existing federal debt flowing into the bond pits next year, looking for a home, and it'll find a home eventually, but I doubt at 2.88% yield on the 10-year that we have today.
David, I want to get your view on gold before we let you go. Hitting a low not seen since January of 2017. Where do we go from here?
I have no idea where it goes in the very short run or next quarter or next year. My view on gold is that it is the asset of last resort in the long run when this crazy central banking system and expansion, unsustainable expansion that we've had over the last decade or two finally reaches its limit. And then when it breaks down, gold will soar again. I have no idea when that will happen. I don't think you invest in gold for returns next year, but you do buy it as insurance, because what we have is $22 trillion worth of balance sheets in the central banking system of the world that isn't sustainable.
All right, David, great to have you. David Stockman, thank you.
Okay, thank you.
Grizz, you're trading gold for us.